Hey, Forex Fortune Hunters, Tom Willmott, welcome aboard. As many of you know who've been watching my videos over the last several years, we've often used the 12, 16, 20, and 24 exponential moving averages, EMAs, to build our bands of moving averages. And when they cross over, when the 12 crosses over the 24, we've noticed it would recommend to you a consideration of a new trend in price, a change in direction. Over the last month, I've been using a different set of moving averages. I've shortened up the moving averages. I've changed to using a 6 and a 12 EMA, and I'll show you about that in this video. The volatility that's been in the market has suggested to me I wanted to hurry things up a bit. So if you're interested in seeing how several of our dedicated indicators can bring you profits in the Forex, stay tuned. Hold on to your hat. We'll get started right after this. Okay, Fortune Hunters, let's take a look at what we've got on the chart here. This is a chart of the New Zealand dollar against the US dollar. And the first thing to notice is that this dotted line is the changeover in day. For me, I'm on the east coast of the United States, so this occurs at about 5 o'clock in the afternoon for me. That would be Eastern time. And so you can see that on the other side of the world, in Australia and Japan and so forth, as we enter into the Asian session, this is when you're likely to see at least a small move in either the Aussie dollar or the New Zealand dollar, as well as the Japanese yen. So those pairs are more sensitive to that Asian time frame, even though the actual change in price may not be as great as it might be during one of the more active sessions like London or US. We won't get into too much about session times today, but I just wanted to point out to you that this was the beginning of the day. This is back on the 16th of May, the 18th of May, poor old eyes, 18th of May 2021. And I'm now going to review with you the 3 or 4 different indicators that I put on the chart. First of all, as I mentioned in the intro, we have changed our multiple moving averages to the 6 EMA and the 12 EMA. And with the 12 EMA, I have, and by the way, I left-clicked on the chart to see what the properties might be. And in this case, I point out to you that instead of using the closing price, high, low, open, and close are your options, I've used median price. Maybe not critical or necessary, but I found that it's a little more fine-tuning that we can do, okay? So, in any event, if you did not have any of these other indicators on it, you would notice from the moving average crossover, this white medallion indicates that as we moved into the end of the previous session, we had an open way down lower as contracts were settled out by the broker. We had some activity in here that was kind of weird and wild. And by the way, in this particular area, you want to be careful not to be trading. The spreads are likely to be exorbitant, and you want to avoid those high commissions. Wait until either this session is a little bit far from the close, or in fact, as you see this opening, you see it's perfectly okay to kind of wait and see what settles out in this particular time period. I have on the chart now a 15-minute chart of the Kiwi and the US dollar. Okay, the second indicator I have is our favorite, the Willmott Signals, which goes all the way back to our book published in 2016, the amazing Zeelander Flytrap Forex trading system. And that indicator suggests that you would put, when you have a crossover in the bands, you would begin to put a line here at the closing value of this medallion candle, and that would be the value that you'd like to see the moving averages cross in order to see that the trend has been continued and sustained. Oh, and I'll show you an example of where it doesn't happen here. But in any event, this crossover, and I've used the 6 EMA here, creates on the signal line this green up arrow so that we know maybe we're going to get into a pretty good and decent move. The third indicator I'll show you is the T3 Tilson. And this particular indicator, which is also available on my Dropbox site, and if you'd like these indicators, check the description below the video, and there's a link to get an invitation to have the indicators for free, downloadable from Dropbox. And so just fire off an email to me via that link, and we'll be in business with that. The T3 is there, and I use a 24 period, and then for the hot value I use 0.618. Okay, now that purple line or magenta line is got to be beneath this for the second part of the template to be true. So now we have a medallion crossover. We've had continuation of the moving average past the signal line with this green arrow, and now we also have a confirmation that the T3 Tilson is headed higher, although gradually, and it is below this configuration of candles. Notice also down here in our fourth indicator, the RSI, that we have a 45-55 band, and you can see here as this begins to take place, you see you're not free here. You want to break out and then come back and touch. You want to break out and then come back and touch, and notice there was another legit entry up in this area as well. So those are the indicators that create this template. If you wanted to go to the templates here, you left click on it, and here is a save template. That's a bit off your chart. You click on save template, and then you simply name your template and you're in business. Once again, I'll bring this up. I have called this simple crossover hot, just as a holding place name for it. And now the situation is that if I want to move to the euro, I can in fact go to simple crossover hot, and there we go, and now I've got this up and down. Now I want to show you that this doesn't always work, obviously. Here's an indication that we have, even though we have this downward move here with a red arrow to the downside, we have a choppy market. You can see there's no trend developing. Typically this takes place after a big move, and here was that big move, and then we get into consolidation and the market isn't quite sure what the heck to do. This would be a potential trade here if you'd like, but bottom line is I'd like to see this hanging around the signal line or a little pullback into the bands. And before I got involved in any of this. This is just too violent and changeable, and I don't think it's as reliable as something like this. Here we go down below. We have our indicator. Now we have our configuration to the south. The arrow is in place, so this has been our crossover. These lines are in position. We're down here. We've broken out slightly, and then we pulled back into the bands before we come crashing down towards the close. This is the other time that you may be able to find a trade at the end of the New York Stock Exchange trading day, sometimes between 1:30 or 2 in the afternoon and the close of the market. You can see this kind of a press downward, but you don't want to be entering a trade down here because, as I said, the pip spreads are awfully big typically, and it's no good. So take your trade from here to here. This would be in the range of 15 pips, not bad to pick up right at the end of the day for an hour or two's work. And the same thing would be true as you look over here. Now, one other thing I'd like to leave you with, I have also noticed that when you get a crossover to the north or the south and it can't break through, typically the next move will be the one that drives the price in a very specific direction. So notice here, can't break through this, although we've had the crossover here and this looks good without a breakout to the north. This crossover comes down, now we're below, and you can see right in this level we have a nice move to the south, and it's also at the reasonable beginning of that Asian session or into the European session at 3 a.m. Boston time. Now, one last thing, and then I will leave you. Notice here also that if you cannot get a close above the 12, as here, it's a pretty safe bet you're going to be able to continue to see the trend sustained. I'm not sure I'd get in down here. There aren't enough pips left. But in this particular area, this move up and then a close, an open rather, between the 12 and the 6 with a downward spike. Notice that you could put your stop right above this, right at the conjunction of the T3 Tilson and the signal line, and your stop loss in this particular case would be something in the neighborhood of 10 pips, and the return on that investment is 41 pips to the downside. So I hope that's helpful to get you going on this new moving average crossover input values. And if you have any questions, don't hesitate to leave a comment down below. Please sign up for our indicators if you'd like them. Subscribe to the channel. And as always, thanks for watching. See you next time.